welcome. You're watching Bloomberg Quint. Now, today we're here in the Bloomberg building in Midtown Manhattan talking to Anindya Chatterjee, the Managing Director and Senior Portfolio Manager at City National Rochdale Emerging Markets Fund. Anindya has been a keen India investor for a very long time. So you told me that about $250 million in your emerging markets fund is invested in India. That roughly works out to about 24% of the fund is invested in India. Is all of it already put to work? Is some of it in cash? Do you see at this point in time valuations have been very rich, so you've been taking some money off the table and hoping to hold on to it, maybe in the hope that if there is a correction you'll come back in as a buyer?
So India is a large market for us, and yes, overall roughly about $250 million of our fund is invested in India. That shows and underscores our confidence. We are a long-term investor. So when we invest in even companies, we hold 3 to 5 years.
Right.
Our strategy is very long-term in nature. So we are looking beyond the noise and the immediate volatility and taking a long-term view. In that sense, we are very overweight on India relative to the benchmark. That our benchmark is MSCI EM Global and MSCI EM Asia, so we are substantially overweight stance as far as India is concerned. That kind of reflects our view on the market.
And that reflects your view on valuations as well, or are you at this point in time getting a little nervous about where valuations are headed?
So India valuations have always been rich relative to other emerging markets. It's at a premium, and for good reasons. And I don't see that premium either widening or narrowing substantially from this point. I don't see massive unless this geopolitical uncertainty goes beyond scope that I cannot think of right now. Otherwise, India does have more resilience relative to many other emerging markets. So India does command that premium for good reasons. The entire globe is today growth challenged. It's very hard to find companies that are growing double digit in EPS with reasonable valuations. So the sectors that we are focused in India are unfortunately very rich in valuation. It's not more rich today in valuation than it was 1 year back in my perspective, but I don't see that changing so much. I'm not.
At what valuation level do you become uncomfortable? I know this is difficult. Maybe if you can talk about it at an index level, or maybe even, for instance, you're very heavily invested in financial services, banks mostly, IT. I can see 4 or 5 stocks in your portfolio in India, including Infosys, Mindtree,
like
some consumers, Imami, ITC, but large number of banks, 3 4 banks, 3 4 IT stocks.
It's a very good,
at what point do you start
question.
getting?
It depends on the sector and the company. So we are looking for a combination of reasonable value and reasonable growth with a reasonable degree of earnings visibility. Okay. So reasonable value and reasonable growth. So a company which is, say, sustainably growing at 25% YOY, we may be okay if the valuation in terms of a PE multiple, if it applies to it, is, say, 25 times. If a company is growing at 10% YOY, so the valuation would be different, that we would be comfortable for that sort of a company. So the companies that we are looking at must qualify in this parameter of kind of a PEG ratio. If it is a consumer company, as to relative to its growth, what the multiple the company is now trading at. And on that perspective, if the PEG ratio is well below 1, we are comfortable with that.
Okay, so at this point in time, you are not overtly worried about or overly worried about valuations, either from an index point of view or a sectoral point of view.
Valuation is always a worry for India. It's always a premium.
I'm sure you got your eye on it all the time.
And I don't think at this point it's especially stretched valuation.
Okay, fair enough. Okay.
Because the market has actually not gone anywhere in the last few months in particular. And if you take a 5-year chart of India in dollar terms, you'll see the market has not done much. So people forget, and people just look at the last 1.5 year rally.
The earnings have not done much either, Anindya.
So
I think depending on who you talk to, there are many people who are still quite disappointed with earnings performance.
Absolutely. Right? So it's a bottom-up market and a stock-specific market. So the stocks that we are invested in have grown in their earnings and have not really got stretched in their earnings multiple.
Okay. So there is the long list of stocks, and just for our viewers who probably don't get onto your site and look at your filings, I can tell you that they range from oil marketing companies like BPCL, then there's a bunch of public sector companies like Coal India, there's CESE, there's Container Corp, some consumer-oriented companies, Imami, ITC, Crompton Greaves as well, to some extent, a couple of leading pharmaceutical companies, Dr. Reddy's, Sun Pharma, a bunch of banks, HDFC Bank, ICICI Bank, Kotak Mahindra Bank, at least 3, a bunch of IT companies, Infosys, you've got Mindtree, Tech Mahindra, not exactly an Indian company, but Cognizant, which gets counted amongst some of the top Indian players. And then you've got Tata Motors, which is, I think, a big holding as well. Right now, here, there are 2 or 3 questions I want to ask you about these.
You got my portfolio downloaded completely.
Well, this is your June filing. So,
yeah, this is publicly available.
No infrastructure, no cement.
Right.
You've got HDFC Bank, you've got ICICI Bank, you don't seem to have invested in NBFCs, they've had a good run recently. Right. No telecom either in the portfolio, right. And heavily skewed towards some defensives like IT and pharma, which have not necessarily done very well in the last few months.
Recently.
So talk me through this investment strategy.
Well, there are lots of misses, and I can never fall short on counting all the mistakes that I've done. I wish I had some of the NBFCs. I wish I had timely bought some of the cement companies. I missed some of those. But our focus is on companies where there is possibility for us to ride this wave of rising middle class. So it needs to be, our portfolio is focused on this rising middle class, how to capture the upside from this rising middle class. So consumer, domestic demand focus. The banks that we hold, the private banks, are either positioned as consumer or the corporate banks that can leverage from domestic demand, or we invest in exports that provide or can leverage on the long-term sustainable comparative advantage that the country provides.
So you still think that IT in India has a long-term sustainable comparative advantage?
So
But you don't think TCS has that, because that's not in your portfolio. You have Infosys, Mindtree, Cognizant, Tech Mahindra, but no TCS.
It's a bottom-up stock picking. It's not that TCS will never be in our portfolio. So at every point of time, it's a bottom-up decision of what is included in our portfolio, and we try to take a medium-term approach.
So did you find TCS too rich for your liking whenever you were looking to make these allocations?
It was a relative decision. I don't want to talk about one particular company as such, but IT, if you come to discuss about this comparative advantage that India provides, I think there's still a long way. I mean, the entry level compensation of IT engineers in India have hardly grown in the last 10 years. I mean, even now they get less than $10,000, and graduating engineer with undergrad degree in the US would still in Silicon Valley they're getting 6-figure salaries. So the gap is so big that there is a long-term sustainable comparative advantage without doubt. There would be cycles where US companies may or may not invest in their IT infrastructure and their integration process, etc. So
but you're willing to ride out those cycles?
Yeah. So I would take a 7-10 year view, and I would maybe balance my weight.
I don't mean to harp on one stock, because I know you don't like talking stock specific, but yet you've got 4 IT companies in your portfolio and you don't have TCS, and I'm curious as to why that happened, because it's not one IT company or 2 IT companies and therefore you don't have TCS. You have 4 and you don't have TCS.
Well, you'll see that first of all we have a bias on mid caps. So across the portfolio in each sector we have a bit more bias on mid cap. So a Mindtree or even a Cognizant is a different size from TCS.
Of course.
So that it kind of highlights our focus, that we are a bit more mid cap focused. Our fund has an average portfolio market cap of constituent companies of is about $3 billion, compares with almost $10 billion for the index. So we are very different from the index. We are not benchmark hugging.
Okay. That sort of covers the conversation on IT. On banks, I could ask you about what you think of the non-performing asset problem that India faces, but you've clearly steered as clear as you can by
From the PSU banks.
from the PSU banks. And I think, given the fact that HDFC Bank is one of your top holdings in the fund,
Right.
you made it very clear what kind of financial services
Kotak
business.
Mahindra Bank, for example.
Why,
Yes.
why not NBFCs? Is it that when you started looking at them, they were too rich already?
They looked expensive, and I was not very confident of the growth in earnings that they could show. So, of course, it was a miss. I wish I had a couple of real good NBFCs in my portfolio.
Okay.
But the banks that we have are probably the best in class, not just in the country, but in the region, if not in the world. So, an HDFC Bank has generated, I think, more than 20% annualized return in dollar terms in the last 20 years. There are very few banks in the world
that can match
compete.
that. Yes. HDFC, ICICI and Kotak Mahindra Bank are your banking plays. In FMCG or consumer plays, you have Imami, you have ITC.
Yes.
And I think to some extent, if you want to sort of count in
Crompton, yeah, of course.
That's it. So those are the three plays. Can you talk us through why or how you've picked these particular stocks?
See, consumer is very rich in valuation, always, and have been, and it's been a challenge to pick stocks there. Either there would be regulatory risks like ITC that has faced. I mean,
and yet you have it in your portfolio.
It's not. That's why it's not a very large weight. Okay, so we have to calibrate on that the risk is there.
But ITC is a cigarette play. It's not necessarily as much an FMCG play. The bulk of its profitability comes from cigarettes.
Sure. So that's part of the consumer story. Of course, it's not. It's a sin stock that way.
Yeah.
But it plays on a lot of stuff, on aspiration from moving from bidi to cigarette, for example, and also an aspiration of a discretionary consumption. So, and also on the demography that so many people are attaining adulthood and would be in that age to do that. So all of that is in favor of ITC, besides a strong management and global in our national brand and reach and distribution. So it's incredible. But the taxes keep on hitting it, and that's a big regulatory risk, besides the warning signs and all of that.
But evidently it hasn't spooked you away as yet from ITC.
I had
we've
larger
had a couple
weight.
of negative budget announcements on
Correct.
ITC.
I had larger weight, and I had timed it somewhat based on the regulations.
So you've pruned some of your ITC
I had larger weight in
okay,
ITC
larger
at
weight.
one point of
All
time.
right, okay. BPCL, OMCs have had good run in the recent past. Have you been adding to those positions?
So BPCL is a sizable position that I have, and it's a great company. It's not an energy company as such. It's really an energy marketing company, and it's more of a retail story.
Yes.
That way, and it can leverage on many of the fact that it has thousands of distribution points, not just in the metros and the urban areas and the semi-urban areas along the highways. It can leverage its infrastructure in many ways. I think it has prospect in e-commerce as well as logistics and distribution. So BPCL is a phenomenal, I think, growth story as well. It is domestic demand, consumer, marketing, and maybe pie of a new economy also can come in into
It's interesting you mentioned e-commerce, because one of the questions I did want to put to you is, for a few months now, maybe 2 years, a lot of investors in India, especially the high net worth ones, have been playing the e-commerce game through logistics, because there are no large listed e-commerce players in India in any fashion, and you don't seem to have any of those in your mix. So I'm just curious, is that something that is not yet a story that excites you?
I've looked at it. So either they're extremely expensive or illiquid. Liquidity is a very big impact. So I cannot go and buy a Blue Dart just because it can expand on that, for example. But it's not liquid enough for me. So there are limited opportunities that will satisfy this reasonable valuation and reasonable growth combination.
No infrastructure companies, even though when I look at your emerging markets fund portfolio, you are invested in China infrastructure. So isn't it that infrastructure is a no-go for you? It's just that in India you don't seem to be so
I'm
keen
not
on
invested in China infrastructure. In fact, in China I have only consumer, e-commerce, consumer tech. I have some infrastructure maybe in Philippines, for example, in Southeast Asia, where Philippines is a massive growing market for the BPO industry, the call centers.
Correct, yes.
And I have investments in those that provide end-to-end call center solutions and can be regarded as infrastructure
companies. But not
companies.
in India. No infrastructure, no capital goods in India. You clearly don't seem to have a positive call on them as yet.
So investments have been challenged in India for a long while now.
Correct.
So growth is, the growth that we are seeing is more driven through non-infrastructure initiatives so far.
Sure.
Of course, there are
but what about roads, for instance?
Yeah, there are
evidences. Pumping in lots of money into
there are
roads
evidences
and
that the investment has picked up in roads, and we will certainly look at that. So it's not that we'll never invest in infrastructure
but as
in
yet
India.
it's
As
not
of now,
looked
we
so
have not done
interesting.
it.
Okay,
yes,
where do you see India right now, both from a macroeconomic point of view and valuations we've spoken of, but therefore the kind of impetus that the markets can get from a recovery in the economy, earnings? Do you feel confident that we are at least on a recovery path?
So software exports, for example, do look challenged when it comes to dollar term earnings growth at this point. The pharmaceutical sector, the pharma exports, Dr. Reddy's and Sun Pharma and all the others have seen a separate challenge from the FDA initiatives, crackdown on their facilities. So there are sector-specific challenge. Overall, I think the fact is that exports are not growing, imports are shrinking even faster in India, investments are weak. So it does share the same growth challenge environment as it is today in the rest of the world.
Okay.
So it is hard to find double-digit earnings growth.
So you're not yet confident that we are on the recovery path, both from a macroeconomic point of view and therefore also from a corporate earnings point of view?
So we are probably in a recovery path, but substantial upside in earnings is not visible yet.
Okay. I have one quick last question, and actually it's two in one.
Okay.
Two investments. I think you were invested in Amtech last year. That's gone south, right?
Yeah, I mean, that was a mistake. I don't know why it has come up on my portfolio in some of the more recent interviews, etc. It's probably one of the smallest position I had, and people make mistakes. So that was one of the mistakes that we made.
Last year, your fund voted against the re-election of Dilip Shangvi and some other management people at Taro. This I picked up from your proxy filing. Now, I don't know whether it is...
What was the question?
Yes, the fund voted against the re-election of Dilip Shangvi and some others, senior management, including Sudhir Walia, at Taro, which is a Sun Pharmaceutical company, group company. And I was just curious because it's part of your proxy filing that I was going through. And unless it was just something you followed, a proxy advisory note or something like that, but I wanted to put the question to you, was there something in that decision
No. So
that stands out?
I don't want to comment on a particular action. So Taro is one of our holdings in the US, so, and Sun Pharma is the largest stakeholder in Taro. Taro is actually a gold mine in our view. Okay. That it has great products and it's very reasonably valued and it's underfollowed, and so we stay invested long term.
So why did you vote the way you voted?
I don't think we voted against it, so
Okay, fine, all right. I won't put you on the spot on that. So one final question. Do you have a view on where you expect at least the headline indices in India to be, let's say, in 12 months from now? Because I know 3 or 6 months would be unfair to ask you. So
I don't have the power to predict the index. I don't know where it'll go.
But instinctively, which way do you expect it?
So what we do is we look at sectors and companies and take a medium long-term view and stay invested. Doesn't matter where the index goes. For example, our benchmark is MSCI EM. Since inception of the fund, the index has almost gone nowhere. If we were focused on the index and taking a bet on where the index would go, we would be around that, going nowhere, and our fund is up more than 60% during this period.
It's one of the top-rated funds, and you are one of the top-rated fund managers on Morningstar, Lipper, all of
so
that.
Far. So I don't really bother about the index, and I'm looking at the space and the sector and the companies where I'm invested in, and trying to filter the noise, trying to take a long-term view, and that's what is the challenge. It's not easy to do, but that's what our focus is.
Do you believe the indices will be higher by next year than lower?
So directionally, if you take a medium-term view, I think there should be better days ahead, because for the last 5-7 years, emerging markets have underperformed.
Right.
So you have developed markets hardly with any growth, 1% and 2% growth, outperforming emerging markets. Not that emerging markets were growing slower. So EPS growth has been much better relative to the developed markets, despite all of the slowdown in China and rest of emerging markets. EM has grown, but indices have not gone anywhere and have underperformed the developed markets. So there's a mean reversion prospect favoring emerging markets at the least. So I would say that the prospect of indices doing better going forward look better to me.
Even if the Fed hikes rates?
Fed hike should be digested by now. It's been a hide and seek play for a long time.
Yeah, 3 years
as and when Fed hike happens, that's a challenge for many infrastructure companies that I've been avoiding, for example, those companies with large debt. So the companies that we invest in, say in India, the software services or the pharmaceutical or the consumer companies, there's no debt. Yeah. So debt would suffer in the companies that have large debt would suffer. But overall for emerging markets it would be a challenge, and rising interest rates cannot be all that great. But if growth comes back, then people would be able to ride and tide through this interest rate hike. And we don't expect interest rate hike to be so rapid and strong and all that, right?
The Fed has cautioned about that several times now.
So a very mild rate hike over time, I think it removes the uncertainty as to when it will happen, and I think that's the positive people ignore.
Okay, Anindya, you've had a great track record as a fund manager.
Thank you.
You've got quite a bit of money in cash, as you pointed out to me, in India. So I'm guessing that the next few months will be time that you deploy that. Thank you so much for speaking with us here
Thank you.
at Bloomberg.
My pleasure.
Thank you for your time.
Thank you.